You work hard, make decent money, and then tax season hits, boom. Half your profit disappears before you even touch it. Most business owners don't realize they're handing over way more than they have to. But here's the thing. The rich aren't paying less because they cheat the system. They just understand it. And one of the biggest tax-saving tools hiding in plain sight is something called the S-Corporation. If you're self-employed, running an LLC, or freelancing, you're probably overpaying in taxes. That's not your fault. Nobody teaches this stuff. But once you learn how to structure your income like an S-Corp, you can legally keep thousands more every single year. So, let's break it down simply. When you're a sole proprietor or a regular LLC, you pay self-employment tax 15.3% on every dollar you earn. That's brutal. Let's say you make $100,000 after expenses. You'll owe over $15,000 just in self-employment tax before federal or provincial income tax even kicks in. With an S-Corp, you split your income. You pay yourself a reasonable salary, maybe $40,000, and the rest, say $60,000, comes out as profit distribution. That second chunk isn't hit with self-employment tax. You just saved thousands. The IRS still allows this structure in 2025. The key is to make the salary reasonable for your role and industry. Not inflated, not too low. The rest flows through tax-free from FICA and builds your wealth. Now that you're saving on taxes, don't let that extra money just sit. Put it to work. An S-Corp can set up a solo 401k, a powerful retirement plan for business owners. In 2025, contribution limits are higher than ever. You can contribute up to around $69,000 combined from your salary and company match. That means less taxable income now, and your investments grow tax-deferred. You can invest that money into what you understand: stocks, real estate, even private lending. The S-Corp gives you a framework to actually use your profits to build assets. Here's where it gets fun. You can formalize your business operations, set up a board of advisors, track legitimate meetings, and write off more. Think about it. You meet with your partner or team to talk strategy. That's a business meeting. You travel for planning or marketing. That's deductible. You provide a phone or laptop for business work. Also deductible. The point isn't to trick the system. It's to operate like a real company and get the same tax treatment real companies do. Picture a small business owner making $120,000. They switch from LLC to S-Corp, pay themselves $45,000, and take $75,000 as profit. Their self-employment tax drops by over $10,000. Then they use that savings to fund a solo 401k and invest in a rental property. One structural change, and suddenly their money starts compounding instead of leaking away in taxes. If you're making more than $50,000 a year in your business, it's time to look at an S-Corp. Talk to a tax professional and see if the numbers make sense for you. It's one of the simplest ways to legally keep more of what you earn. So if you want your business to finally start building your wealth, not draining it, hit subscribe and stick around for the next breakdown on how small business owners can pay less tax and grow faster.